This is the first quarter update for the Amplify Transformational Data Sharing ETF, symbol BLOK. I'm speaking with portfolio manager Michael Venuto. Michael, let's start at a high level and remind viewers the investment thesis and strategy behind Block.
Okay, so the transformational data sharing ETF block is really focused on blockchain companies. It's an actively managed fund, which allows us to not only invest in the equities, but also have exposure directly to the spot Bitcoin ETFs and various parts of the corporate structure, like convertible notes on various blockchain companies coming to market through IPOs or SPACs. Um, by being an active fund, it also allows us to meet with management, check the supply chain, understand what's going on at these companies and how we can help them improve. So it's an exciting strategy focused on total return in the blockchain ecosystem.
So, folks who are new to investing in this space, it kind of still seems like the Wild West, but Block has been around a long time. Could you give us a little bit of the history of this particular ETF?
Yeah, so Block's been around about 4 years. The idea was really that Toroso, my firm, where the sub advisor of it, had been investing in some of these blockchain companies for our separately managed accounts. And the reason was we saw blockchain as a threat to the ETF ecosystem, right? It has the ability to remove the trusted third parties like custodians and exchanges and things like that. And we wanted to get ahead of it. At the same time, our partners at Amplify, we're working with an index provider and looking at this area as a way to get people exposure to this change in technology that impacts all of financial, all of fintech, um, the metaverse, things that we haven't even thought of yet. So it was a good marriage, and we've successfully managed Block together for the last 4 years.
So, before we get into the first quarter update, I'd like viewers to know that Michael's team puts out a lot of research on this space. If you go to blocketf.com, that's blocketf.com, you can find their monthly blockchain update. So, Michael, let's talk about the first quarter. What portfolio changes did you see?
Yeah, so in the first quarter, we continued what I called my upgrade. In Q4, we talked a lot about removing some of the miners and smaller blockchain companies that would have a harder time in a more volatile crypto market. Meaning, at the core of all this, the blockchain companies are really the picks and axes of the crypto and blockchain economy. So we continued those upgrades, meaning less companies, higher quality companies. We also saw one of the most exciting companies in the blockchain ecosystem come public, which is Core Scientific, symbol CORZ. We also saw some really interesting news out of Intel, and we were able to verify that with various miners within our ecosystem that Intel is getting into the chip making industry for cryptocurrency mining. And we've also spent a lot of time looking at plays in the metaverse, plays in NFTs. We even built our own ETF nerd NFT as a thought experiment. We don't make money on it. We went out of our way to make sure it's not something we make money on. We did it as an educational platform. But to that end, in the portfolio, we added Roblox. After it's been decimated as a stock price, the value that we see there and the ability to play the metaverse, it's the first thing that we found that we feel comfortable investing in there, and we've been looking for a long long time.
Yeah, so let's go a little bit deeper on NFTs and the metaverse for folks who are new to the space and looking through the lens of investing in there. What do folks need to be cognizant of?
All right, so first off, there's very few companies that are public at this point that have any meaningful revenue from the metaverse or NFTs. There are other people, looking at it, and it looks a lot like what the blockchain industry looked like 4 years ago when we started Block. So I understand it now. The metaverse and blockchain are linked, right? The blockchain is essentially the liquidity or currency of a metaverse world. And so that's why there is that linkage there. The concept of NFTs is the is back to the core value prop of blockchain, which is making something unique in a digital world. Right now, that sounds like a very philosophical statement, but it's extremely valuable, right? If you have a transaction, you want that to be unique, right? If I want to give $5 to a charity or to No Kid Hungry or whatever, you need it to be verified. That's unique data. Blockchain does that. If you want something to be a unique piece of art or a unique avatar, blockchain does that through NFTs, non-fungible, meaning they can't be exchanged for something that's identical and alike. So all these concepts are going to take time for people to understand. There's going to be scams, there's going to be tricks, there's going to be really amazing things too. On the ETF think tank, if you go there, you'll see the articles we've written about our experience creating an NFT collection. It's really a lot of fun. I mean, I got hooked, learning about the gas fees, learning how the minting works. We walk you through all of that, and none of it was easy. So it's a really great way to start to understand this. It does go back to the nexus of block though as well, right? So watching these NFTs get created and the layers and the components, it's very reminiscent for me of the structure of building an index or a product. And so I can see that what I was afraid of 4 or 5 years ago when we started investing in blockchain as a hedge against the ETF industry, um, I can now see NFTs and the structuring and how the Ethereum chain or the Solana chains can start to create these blockchain traded funds.
Yeah, and then so for investors, they don't need to go out and purchase NFTs or go out and figure out the next play in the metaverse. Really, using an actively managed strategy like Block could have the potential to provide them access to those markets. Is that a fair statement?
I think it's a fair statement in terms of investing in traditional finance, right? We are the on ramp to the companies that are really making money in this space. If you want to go buy and learn with $10 how an NFT works, I'm a big believer in that. But it's to me that's not a security advice or an investment. That's an education.
Awesome. Let's go back to the portfolio. You'd
Yeah.
mentioned a couple of names earlier, Intel in particular.
Mm.
Tell me, why has Intel caught your attention?
So, Intel's one of those names that people have thought would have been making chips for mining cryptocurrencies, and they really didn't have anything specific. What we found is some of the other miners in our portfolio had been talking to them. So, like Hive with Frank Holmes, we know that he engaged with them, and we know now that we can expect them to enter the market in a meaningful way in 2022. Um, that's part of the active management. It's kind of a trust but verify, right? A company can make a statement, but being able to check that with other companies in our portfolio that are in the supply chain is a very powerful thing that has allowed us to find some great investments, but also get out of ones that the street had not yet realized how disrupted the supply chain was on some of these companies.
Michael, are there any other holdings in the portfolio of note for investors?
I mean, I'm still very excited about the call it transactional companies that are not just doing dollars or currency, meaning, right? So I had talked about it in previous interviews with you. We're looking for companies that are using the blockchain for something more than just currency transactions. We've added a number of regional banks that have embraced private companies like Figure, that are now doing mortgages on the blockchain or refinances on the blockchain, and it's giving them a leg up against the Wells Fargo's and the Bank of Americas. Um, we're looking for more things like that. The metaverse is another great example. That's why we're in Roblox now. Um, Silvergate acquiring Diem from Facebook or Meta, whatever you want to call them, Zucker, Zuckerbook or whatever. Uh, but so there's a lot of interesting things coming, and they're no longer just a Bitcoin story, right? Where block does tend to have a high correlation to the movements of cryptocurrency. I consider that beta that I is going to be in the portfolio. But what we're looking for in reality are companies using blockchain to make money. Silvergate's a great example of that. Galaxy's a great example of that. Core Scientific. These are ones that we're really excited about.
So before we get your thoughts on what you see unfolding in the marketplace, I want to make sure the viewers know that uh, Michael's partner, Dan Weisskopf, produces what I believe is the most educational series on the blockchain space. If you go to theblockchaininterviews.com, that is theblockchaininterviews.com, Dan has interviewed some of the CEOs of the leading blockchain companies out there. It's a great informational program. Again, theblockchaininterviews.com. So, Michael, tell me, what are your thoughts right now as you look out over the rest of the year? What you see potentially unfolding in the blockchain space?
Yeah, so well, let's talk about beta first, right? I mentioned the beta comes from crypto, right? Crypto has had a rough year. It's been volatile. um, it doesn't feel like that bull market anymore. However, all the news is good, right? We've got regulation that seems to be supportive of things. We've got statements from Yellen. While we were just down in Miami, we had dinner with Michael Saylor, and that was his big argument: is how Yellen is approaching this is a whole new world, and the executive orders that are coming are going to solve a lot of the issues and allow the SEC to start to engage DeFi into TradFi. Additionally, outside of the crypto beta, the investment into blockchain companies is at record highs. Galaxy just put out a report on this. It's in our blockchain monthly for April of 2022. This chart, but I mean, the amount of money flowing into the private and public companies to take this technology and improve things is astronomical. Honestly, if that money had been going into just the protocols or tokens or Bitcoin themselves, the price would be astronomically higher. I think the lack of regulation has forced people to invest in companies as opposed to the protocols themselves.
Excellent. To learn more about the Amplify Transformational Data Sharing ETF, visit Block ETF, that's BLOK ETF.com. Thanks for coming on, Michael.
Thank you.